Hello guys, welcome to today's end of the week market review and analysis. What an interesting week it has been. We saw a high level of activity in the market. We saw the real central bank hike rates across board. We saw the Federal Reserve, we saw the Bank of England, the conservative note of the Bank of Japan. We saw the market across board. It was volatile during the week. A lot of zigzag movement, directional movement we've seen during the week. But today we're going to be reviewing what the markets have done in the previous week. We're going to also give an outlook of what to expect in the coming week. Please subscribe to this channel, like and share this video, and I'll also look forward to reading your comments. My name is Adetunji Adeshina, lead coach at Trading as a Business Group and private fund manager at Economics Partners Limited. So back to the market. So we've seen that in the week we saw the S&P index. As it is our approach, we have a top-down approach to analyzing the market. We look at the broad index. We'll scale down to major instruments, assets, both in the FX and the stocks market. Then we pick out one or two stocks that gives us a potential outlook and potential trade setup for the week, in line with what our expectations are. So let's back to our charts. We're looking at the S&P index, the weekly time frame. We could see that the S&P index has a strong bullish rally in the week. It gained 6.45% in the week. Let's take a look at the Dow Jones Index. The Dow Jones Index actually declined by 2.98%. But there's some technical interesting formation that we could see on Dow Jones Index. The NASDAQ Composite Index also gained strongly. Actually, it gained by 7.49%. With the various rate hike that happened in the US, the Federal Reserve are going to increase rates by 75 basis points. That's some effect in the dollar. Let's take a look at the dollar index and see how the dollar actually behaved in the week. The dollar closed bearish in the week. The dollar closed by 0.51%. So it had a bearish close at the end of the week. Another basic interesting instrument I need to look at is I try to look at the Japanese the yen index. So another index I also make sure I take a look at. It also gives us a basket. So we saw the yen index closed marginally slightly bearish, trading within the range in the week by 1.01%. So we back to our S&P index. We see that the S&P index closed strongly bullish. And the interesting thing about the S&P index is that it found support. This is the weekly time frame. It found support at the moving average, EMA moving average. It has been on the downward movement since it has been actually on the downward movement since the beginning of the year. We've seen the S&P index being on a downward movement after it got to a significant high at about 48.09.86. So, but in the long run, it has been an uptrend, and we've seen the downward movement, the corrective move. So what we're looking at was how the markets, how the S&P index would behave around key levels. So we saw some bit of an interaction, a bit of a reaction around the 30.2 Fibonacci retracement level zone, and same as it is, and back to the EMA moving average. So would we say that the trend has resumed. I wouldn't come to that conclusion that the uptrend has actually resumed in the S&P index. But what we would say is that the index probably has actually we would say the index is now probably in a consolidation phase, and we would see some short-term upward movements in the index before we finally looking towards a breakout. So my expectation is this. I expect the upside rally to continue in the week because this is a very interesting technical pattern, and finding support at the moving average. So I expect the example interest to trade back within our downward channel trend line in the coming week. So I expect stocks listed in the S&P index majorly to rally in the coming week. What do I expect in the Dow Jones? Let's look at the Dow Jones Index. This is an interesting pattern. So the Dow Jones Index in line in same vein with what we saw in the S&P index, as also in the year been trending downward. Has also been trending downward, and after it, and has been trading within a consolidation zone, long range consolidation zone from 2011. Now, but this is what is interesting about the Dow Jones Index. We saw that the recent downward movement in Dow Jones Index found support at an historical zone of 51.53. So my expectations are that Dow Jones Index also should rally a bit and continue its downtrend. So I'm expecting that the Dow Jones Index should find a bullish movement in the coming week. Let's take a look at the NASDAQ Composite Index, and so also what we've seen in the NASDAQ also in accordance to same direction with the S&P index. We see same formation, a long-term upward movement, a downward collective movement, now reacting around 50% Fibonacci, which is made zones of the long-term upward movement, and the 127.2 Fibonacci extension zone of the short-term intermediate downward movement. So we've seen there's also a confluence of reduction around the EME 200 at the Dow Jones Index. So my expectations are that the NASDAQ Composite Index also in line with what the outlook I'd given around the S&P index to also rally in a way to the upside in the week. So in the coming week, we expect the bullish momentum to continue in the Dow Jones Index. Let's take a look at the dollar, and before we dive down into one or two individual currency pairs and individual stocks. So the dollar has been on a strong upward movement, so we expect the rally to continue. And I could remember we introduced some level of withdrawal of Fibonacci at a point in the dollar to give us to have a particular guide of what is happening, and we expected that the rally in the dollar should continue towards the Fibonacci extension level. But as it is, it has seen a double top pattern around the 105.01 zone. So our expectations are that the dollar may likely come down to a critical, so you're looking at a critical support zone of 103 and 102.44. So a bit of a short-term downward movement to this zone is likely to occur in the dollar. Thereafter, we will see how the market reacts around the support zone, a resistance zone that's expected to become a support. Whether there will be a continued resumption in the uptrend, or there will be a breakout. And so what we expect in the coming week in the dollar is a decline in the dollar. So expect majorly instrument traded against the dollar to rally in a way against the dollar. So that being said, let's take a look at the yen index before I zoom into the individual instruments. So, and the reason I actually looked at, I tried to look at the yen index is because of how the market had reacted to the yen from the beginning of the year. The yen has fallen significantly against other currencies that have been paired against. So we've seen that the yen has declined from the beginning of the year after the brief consolidation in the earlier part of the year. The yen after the bit of consolidation in the earlier part of the year, we've seen a continued decline. But the interesting part is we've seen a bit of consolidation, and we're expecting the yen to appreciate at least to correct in the remainder of the week. So do we have a technical, do we have a gauge, gauge around this level? Let's take a look at it. No, so the yen has formed a bit a low, and it's actually at a significant low. So we expect that should correct a bit. So you're expecting a strong yen in the week, and before a possible continuation of the downtrend. So let's take a look at some individual instruments, and let's take a look at the FX market. So let's take a look at the FX market. So the first thing is, let's take a look at the euro. So the euro has been consolidating for a while. We've seen a strong downward movement in the euro. Let's take a look at the weekly. So we've seen the downward movement in the euro. But the interesting thing is that it closed the week marginally bullish. As I highlighted in the previous videos, you could watch. Feel free to watch our previous videos where we did some analysis on the euro. So we expected that profit taking should occur around. We've also expected that profit taking. We projected that profit taking should occur around this critical support zone, and which it did. And previous week, and the week just ended. We saw a marginal bullish rally in the euro. Now, what do we expect from the euro around this? Let's dive down to the daily time frame. So our daily time frame, we're seeing a consolidation. So let's also now put a guide. Let's have a guide into what to expect. Let's draw an intermediate resistance and support zone. So let me just pick it up. So I'll have to pick this from this. So we could see that the euro on this intermediate movement downward trend is reacting at the 50% Fibonacci retracement zone. Now, this could signal a breakout below this retracement zone between 50% and 61.8% Fibonacci retracement zone. A breakout below this would trigger the resumption of a downtrend, while a breakout above the 38.2 Fibonacci retracement zone because we need a full close on the daily time frame above the 38.2 Fibonacci retracement zone. Then we begin to look at, and there's an historical resistance level, also intermediate resistance level here. So we're going to be looking at a breakout around the 38.2 Fibonacci retracement zone and the historical level of 1.0638 to now say there's a possible resumption at the 1.0786, and we'll also be mindful of the reaction of price around the moving average. That is if price closes above this zone on a daily time frame. On the other hand, a close below the 61.8 Fibonacci retracement zone would trigger a renewed selling pressure in the euro. That being said, let's take a look at the next major currency pair that is being traded. So the outlook in the EURUSD, it was a big downtrend. A minor correction is occurring, finding it hard to breach the 50% Fibonacci retracement zone. Our game plan is a breakout above the 38.3 retracement zone, which tell us that the upside movement will continue towards the dynamic resistance support, which is at the moving average. While a break below 61.8 Fibonacci retracement zone would signify the resumption of the downtrend. So the British pound also the same, in line the same directional movement with what you have seen in the euro. It has been in a downtrend overall in the long run. A bit of a correction. This is actually the support is actually a support zone that we have highlighted also. What we've been looking at for weeks, so which we expected that correction should occur in line with our expectation. It actually did. So we've seen that the British pound also has been correcting in a way. So let's also put a gauge to it. Let's have a guide into how the market is reacting. So let's draw Fibonacci and see where the market is. So same as what we've seen in the euro. The British pounds is trading at the 50% Fibonacci retracement zone. So this significantly tells us that the market is looking for a direction, in search of a direction. And a break below this historical support zone, and it should actually have been below the 38.2 Fibonacci retracement zone, then we'll see the downward trend would resume, slightly to resume, and we're likely going to see a sharp downward movement. But the break above 61.8 Fibonacci retracement zone, then we look towards the 78.40, then the 1.266 level, and we also take into consideration the moving average, which may likely serve as the resistant zone. So our expectation for British pounds is that we wait for a break below in line with the overall downward direction. Let's take a look at the final before I leave. Actually, we want to do gold. Let's take a look at gold, then I take a look at different stocks. So it's noted for weeks that gold has been trading in a consolidation range. So it's you have to wait for a breakout. You have to wait for a breakout. So there's nothing to trade around gold. So gold is trading within a consolidation phase. So it's consolidating at the moment. So you have to wait for a market. When the market breaks out, that's it then. So let's quickly take a look at some individual stocks. I remember 10 days ago we looked at Pfizer, and this referred to my video. I actually had to repost the video. Please refer to my video done analysis on Pfizer, and interestingly, let me just take one. Okay, good. Okay, good. I could remember on the 16th, we did analysis on Pfizer that we're likely going to see a bullish upside movement on Pfizer. So if you had followed my call, you would you'd probably be in the money at the moment. So Pfizer found support. It broke the upward sloping trend line, but we consider it as a fake breakout because there was a significant resistance line that the market couldn't breach. So we highlighted that also, that the downward momentum couldn't continue. So it gives an insight that we may likely see an appreciation in price. And in line with that, it's trending up at that point, trending upward. We noted that this Pfizer probably was trading at a discount then, and the breakout was a false breakout, and a renewed buying pressure will be seen. And in line with our expectation, they actually follow suit. Another interesting stock I look at is GSK, because I look at the pharmaceutical stocks. Same with Pfizer. We noticed that there was a breakout of the upward sloping trend line. So we're trying to look for where the market you found appropriate discount to renew the buying pressure, and it did at the support zone also that was not there, and GSK also rallied at the point. So let's take a look at the stock I'm looking at for the week. I'm looking at name, and this is the reason. Let's take a look at from the bullish. Now, this is let's get this chart all together. Okay, let's before I go to name, I still expect the upward movement in GSK to continue. Strong bullish close, find support at historical level and the moving average. So we expect a continued rally on the upside. Let's take a look at Pfizer. As the rally ended, no. So we're expecting an upside movement. And if we break out above the downward sloping trend line, we trigger a further upside movement to the upside, further upside rally. So, but this is a strongly bullish formation in the week. So we expect Pfizer to rally strongly. Let's take a look at two stocks. So let's take a look at the name. This is what I'm actually looking at. Name on the weekly time frame for 2 consecutive weeks has found support at the 100 EMA. So that could mean that we may likely see a bullish resumption. So this is find support at the 100 EMA from what we call a spinning top. At this level, it should be considered as a reversal pattern. So on the weekly time frame, we may likely see a bullish movement in the share price of our name. And we're looking at the 72 level before we could, and thereabout, look at how the market reacts around the 72 level. On the other way around, a break below the 62 zone will tell us that the stock share price would continue on a downward movement. Now, another interesting share price I want to take a look at is Shake Shack. Shake Shack. It's interesting because for weeks now, Shake Shack has been on a downtrend. Fundamentally, it's a relatively strong stock, but it has been on a downtrend basically due to the overall general market sentiment. Now, Shake Shack closed the week slightly bullish, and we expect that at this point it is also another important support zone. Okay, good. another important support zone. So we expect that Shack should rally slightly above. It's really trading far down, but we expect it to rally slightly above. And finally, Intel is another stock that I did been watching. We thought Intel will rally from the 45 price some weeks back, but the general market sentiment drove Intel back downward, and Intel has been on a downward trajectory. The question now is this: is this an important level for Intel? And this is what I want us to look at. It is, because this zone was actually a support zone, and there we now see Intel react around the support zone. This is what we call an outside A bar. So we have what they call the inside A bar, the bullish engulf in a way, but this is what they call the outside A bar. The previous bar engulfed the current bar, and it was bullish. So this is more like a reversal pattern. So what do we expect from Intel in a week? We expect Intel to rally, then possibly down, or a breakout above the significant zone, support zone, will trigger a bullish movement in Intel. So hi guys, thank you very much. I hope this video has been very helpful and has given you a good insight into what to expect in the coming week. Please remember to subscribe to this channel, share and like this video, and I also look forward to your comments. I wish you a profitable trading week. God bless you. Thank you. Bye.